Many so-called experts are guessing that China's economy will crash, with one expert claiming that China is literally screaming for help, while another believes that a debt bomb is about to go off. These people believe that the zero-COVID policy of the government, which puts parts of the nation under constant lockdown, will cause the property bubble to burst, which will drown them in debt and the economy will collapse. Plus, there are the US-imposed restrictions that are apparently supported by its allies in Asia that are being placed on China's exports and investments overseas. So, what are the chances that China will collapse? Let's find out. First of all, the real estate crisis has gotten out of hand. Evergrande, the second largest private property developer in China, was on the verge of bankruptcy last year. According to the Evergrande property model, which is basically a pyramid scheme, the business raises money through the pre-sale of a high number of units, as well as from hundreds of thousands of individual investors, and then utilizes the money to finance more sales by accelerating ongoing development and paying off debt payments. This works like any Ponzi as long as it's accelerating, but as the market slows, those incoming revenue streams begin to lag behind the growing trend of cash demands. There are now roughly 1.2 million people waiting to relocate into Evergrande, which includes about 800 incomplete projects. Many Chinese buyers have stopped making their initial mortgage payments because of the current real estate crisis, which has affected millions of people. Chinese homebuyers' boycotts of mortgage payments are expanding rapidly, affecting at least 301 projects across 91 cities, with a potential impact on mortgages worth an estimated 2 trillion yuan or $297 billion. In China, real estate accounts for almost 70% of household wealth. According to some Chinese banks, these deposits are actually mortgage investment products, meaning they can be repossessed. This caused the government to isolate the banks with tanks when there were loud protests outside several banks. And in the meantime, even before the COVID collapse in 2020, China's usually amazing yearly growth in GDP has been declining. Despite a healthy comeback in 2021, new cases of COVID mutations have led to new lockdowns. When compared to the other major capitalist economies, China's death rate has been regulated to extremely low levels thanks to its government's zero-COVID policy. But there has been a decline in employment and economic development. In the 3 months leading up to June 2022, the Chinese GDP declined by 2.6% and 5.9% of people were unemployed overall in May, according to an urban poll, while the figure for people aged 16 to 24 rose to a record 18.4%. It's becoming more and more obvious that the government's goal of a real GDP growth rate of 5% or more won't be achieved this year. So, is this the time at which the Chinese system of growth collapses and the end of all the talk about moving towards socialism, etc.? Many Western experts believe so. According to them, the inability of the Chinese leadership to fully democratize the economy and open it up to capitalist firms and markets is what would ultimately lead to this disaster. It's the time to end the zero-COVID policy and ease limitations like in the West. China actually needs more capitalism, and the private sector has to be expanded if they want to survive. But hold on a second. What are the root causes of the current real estate crisis and debt? Well, it might be directly related to China's growing private sector, which has been supported by a good chunk of the Chinese leadership, especially in the banking and real estate industries. China's investment boom has been heavily focused on unproductive industries such as banking and real estate. Why was home construction in China of all nations left to private capital developers who offered mortgages to buy? Why weren't houses constructed by the public sector for rent? Well, it's been a textbook example of a Western housing market bust, and the state now has to clean it up. The state will need to finish the projects and re-establish the mortgagees' rights to their money in order to settle this. China's economy won't fall, not anytime soon at least. The reason for this is that the government has control over the financial seats of power, including the central bank, the 4 largest state-owned commercial banks in the world, the so-called bad banks, which take on bad loans, huge asset managers, and the majority of the largest corporations. The government has the power to demand that the major 4 banks forget about defaulted loans and exchange them for financial assets. It can direct China's central bank, the People's Bank of China, to take whatever action is necessary. It can instruct pension funds and state-owned asset managers to buy stocks and bonds to support market prices and finance businesses. It can instruct the bad banks in the state to purchase bad debt from commercial banks. It can convince local governments to go on and finish housing projects. So, since the state controls the banking industry, a financial crisis isn't likely if they play their cards right. But the current real estate crisis is a warning that the profit-based sector's instability and unpredictability are having a bigger impact on the Chinese economy. The private sector has struggled both during and after COVID. Just one little example. COVID lockdowns were outsourced to the private sector in Shanghai with horrible results, while they were handled directly by the local government in Beijing with far better results. Besides that, profits in the capitalist sector have been declining, and from January to May 2022, profits earned by industrial firms in China increased only 1% annually to 34.41 trillion yen, slowing from a 3.5% increase in the previous period as high raw material prices and supply chain disruptions brought on by COVID-19 curbs continued to dent margins and disrupt factory activity. State-owned industrial companies had a 9.8% increase in profits, while the private sector saw a 2.2% decline. Only the public sector is still delivering. China dodged the global financial crisis of 2008 to 2009 by increasing state investment to take the place of a failing capitalist sector, what Xi and Chinese authorities have referred to as the disorderly growth of capital. Beijing will soon become the first city to host both the Summer and Winter Games, shattering yet another record. The Communist Party of China will literally move mountains to get the job done, so the Winter Olympics' lack of naturally occurring snow won't be a problem. But President Xi Jinping has a much more difficult challenge than weather control: fulfilling his promise of a more equal system of China's wealth while maintaining steady development. Talking about China's economy and growth model, it always seems to steer away from a Panglossian view of endless success and the expectation that a crisis spelling the end of Communist Party rule is unavoidable ever since it joined the World Trade Organization as the 143rd member in 2001. Examples of these extremes were on display as China's real estate problems grew worse over the last year, with Jim Chanos declaring, "It's worse than you think," and Ray Dalio expressing faith in China's business model. The stakes are getting higher and the reality is far more complicated. It's important to recognize China's achievements over the last 40 years, which includes its rise to the second largest economy in the world and its status as a major trade partner. But it also can't be assumed that Beijing will continue to produce the amazing economic results its citizens have grown to expect, as well as the growth that international investors and governments have come to rely on. Although it's a noble goal to fight income and wealth inequality, Xi's plan threatens two of the most fundamental pillars of China's economic system over the past 40 years: private enterprise and the government's experiment and error approach to policy reform. As entrepreneurs like Alibaba's Jack Ma and others have always worried, Xi would only accept the private sector if it serves the interests of the state, and big private companies tend to wander off that course too easily. Big private sector enterprises that Xi believes might pose a challenge to the Communist Party's monopoly on power have been under pressure during the past year. Xi's strategy included expanding Communist Party control over state-owned and strategically significant private businesses, as well as linking economic decisions to Communist Party interests. At the end of the day, Xi could be shooting for a private sector that resembles Germany's Mittelstand. a huge collection of small private companies that are creative, provide high-paying jobs, and make high-tech manufactured goods. But knowing that Xi's core principles are conservation and equality, achieving such a change will be extremely difficult. Why bother trying to succeed when you can't spend your hard-earned money the way you want to because the Communist Party will ban it or take it away? If they won't be given the last word, very few people will work hard to earn the gold medal. That's a wrap for today. If you enjoyed the video, please leave a like and subscribe to our channel for more awesome content just like this.